Hello and welcome back to Arcadie's Business Tips. Michael Lapede here to talk to you about what is the best structure for your business. And in this video, we're going to talk about cooperatives. Now, cooperative is generally described as a business that is organized, owned, and democratically controlled by the people who use the products or services, okay? So if you think of co-op gas station or co-op grocery store, and if you're a member, they give you these, these checks or these tax slips at the end and say, hey, you got this much in rebates or you got this much, in patronage and allocations because you are technically the owners of the co-op, right? Anybody who shops there, anybody is considered like an owner of the cooperative, okay? And it's not owner, I should say, controlled by. Now, a distinct feature of a cooperative organization is that the role of the owner and the patron are so closely connected. So it just makes it so distinct from others because in most businesses, you're the owner and you sell your product to someone else. But in this case, if you're buying the products, you're in that ownership group technically, okay? Or you're in control at least. Now, the advantages many investors can come in, people can come in with all kinds of ways. You can gain more customers because they say, hey, there's benefit of shopping here or doing this because you're going to get, a kickback. Credit unions are similar. You get shares in the credit union when you set up an account. Very similar, okay? Now, cooperatives are allowed to deduct patronage refunds to members out of before tax income, so that's helped. So anytime they have those patronage allocations, it's actually a tax deduction to the cooperative. So they pay tax on net. So that's pretty good. And the other benefit I really like is that control of the business is kept in the people's hands that are the customers especially, right? So I like that. The people who use the business are the ones in control. And the last thing is profit distribution may be allocated in shares or cash. So you could even give more shares. Now, disadvantage, of course, a cooperative, it may be, complex and be like, cooperative, I don't know, I'm not sure. So the complexity of it and selling it to someone who may be an investor or anything like that is a little more difficult potentially. There may be not incentives for members to contribute additional capital, so it needs extra capital. I'm like, oh, no, I'm just buying my stuff here. I don't need to put in extra money, so it might be a little harder. You need a lot more record keeping, a lot more complex tax and filing registrations than a regular corporation, and also longer decision process with more possibility of conflict between members makes it another disadvantage. So a little difficult. There are some advantages, but there are some significant disadvantages to cooperatives. Again, it really comes down to what is best for you, and that's in the planning with a professional such as us. Consult, go through it, let's see what's best for you. And if you've already started a structure, then you're looking at, do I restructure into another more efficient, effective manner for tax planning, liability protection, estate planning, and so forth. If you got any questions, we'd love to hear from you. Well, thank you very much, and we'll see you in the next video.